How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update for gold versus US dollar. As you can see, that new daily candle just started Thursday, but it is still Wednesday. So today, we got a down close day, and it was a small body day. We did also recently get to 1980. We were projecting price to get to this buy side liquidity above these equal highs. So the look back 20-day period high was ran here from July 3rd. Count back 20 days. This is the highest high. We got there. Ever since getting that higher swing low, price has been on a bullish trend. We were buying close to the opening price of the month, as you guys know. We got from 19 big figure to 1920 to 1950 to 1980. The next level I may suggest is 2000 big figure. I like to see price get here. We had that market structure shift here, that swing low rated with a SIBI, sell side imbalance, buy side inefficiency. The market was inefficient in filling this buy side by dropping so quick. So we get price run back up into that. We also have a counter trend day as well. So if you zoom in here, we can see I have another small down close candle. It's opposite to the trend. We could be buying with a stop order here and a limit order. So our limit order would be placed at the close, and our stop order will be placed at the open. So we're buying on weakness. So when price drops down into this close of the down close candle and knocks you in going long, and when price runs up and tags the opening price here with the limit, you're buying in on strength. So we try to get a dynamic, another large range up. So you can see these candles were small, 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 and then finally in the near future, Tuesday, we got this large candle. So that's how the market normally works. There's only two natural cycles according to Larry Williams, and I attest by this as well. I think that the market only has two natural cycles. It's going to be either a small or large. In very simple terms, the market's either going to give you large days, large weeks, or large months, or large years, or the market's either going to give you a small month, a small day, a small week, or a small year. That's how it works. I think that today, Thursday, may be potential large range dynamic candle to the upside to 2000. I could be wrong though, because there are signs that dollar may be looking to fill back in that liquidity void, and we'll talk about that as well. But before I get there, I see there is a fair value gap here from this candle's low to this candle's high. So we got a busy buy side imbalance, sell side inefficiency. So the same thing that occurred down here might occur here. So price may actually not want to buy after this candle and continue going higher. Thursday may be another down day. Friday may be another down day as well, coming off from Tuesday's high. So Tuesday could be the high of the week, but Thursday and Friday tags back down into this fair value gap. Then we get our catalyst and sponsorship to go high again. Most likely we're going to have maybe consecutive down days, maybe 2-3 down days, even going into Monday, and then maybe we get that finally higher swing low going up higher. So let's mark off that higher swing low. So we have this here. We'll actually copy and paste this. That is your higher swing low after breaking swing highs, and we want to see the same formation here. 1, 2, 3, same thing here. The candle on the left has a higher low, a candle in the middle has the lowest low, and the candle on the right has a higher low, just like this. And then we run back up higher. As of right now, I would play the sidelines because I'm definitely well in profit with the swings. I'm able to take off partials. I'm happy where I'm at right now for the month. And we're coming towards the end of the month as well. So I'm getting ready to process, getting my withdrawal from FTMO and not trying to take away from all the gains I've made this month. That's something really crucial. A lot of people tend to try to squeeze out extra pips out of the month. And I'm like, it's okay. Just let the next month come in and then reevaluate where you think price is going to go there. If you haven't gotten the month right. If you have gotten the month right, same thing applies. Capitalize on your equity. Maintain as much equity as you can. Don't try to go in and do silly things to take away from your equity. So now that your payout or the time you want to withdraw from your live account isn't as much as you want it to. You want to maximize on your wins and you want to pay the trader all the time. So jumping into DXY, we can see how price did sweep this swing high. Like I said, price has not broken any highs in a while now until here. Monday broke this high. Then we failed to break that high again, but then Wednesday comes up and takes out both highs. So it takes out Tuesday's and Monday's highs with this candle here. So once, as you can see, Thursday's candle hasn't formed yet because the DXY's daily candle does not finish forming until 27 minutes Once this candle finishes forming, I would probably suspect price may continue to run higher. Got a volume imbalance here, right? The candles are not touching here. There's like a gap. You also have the SIBI, another SIBI with another volume imbalance, another SIBI here, another SIBI here. So a lot of fair value gaps, lots of inefficiencies here. I would like to see price most likely try to trade up into like 50% of this range, right? High to low, and then give us a reaction to go lower. We also could trade back into these old IPTA daily lows right here. So these swing lows here can still be influential on price. So if price trades up into this, we could get a reaction here. If price trades off into this, we could get a reaction here. Likewise up here as well. If it does get all the way up here, I would like to see price most likely sell again and give us another opportunity for gold to go higher. Now, if we look at the other pairs like British pound versus US dollar, just to cross-reference, we were talking about this bullish order block going into July. We knew that this was most likely the catalyst because we saw a swing low form, a higher swing low, 1, 2, 3, and then price continued to trade up. We do have a run up, same way DXY was running down, GU is running up, and you can see how it's looking to correct that. And then potentially we could probably get a higher swing low and then move higher. If we come down to EU, same thing as said. We had that raid on the buy sides ever since taking out that sell side liquidity down here multiple times. One time here, second time on this swing low here, and then it rallied up ever since then, taking that sell side liquidity, taking out the buy side, and price has been threading the needle back and forth, and it looks like it wants to break down, right? Looks, keyword, it looks like it wants to break down probably and drop down. That may not be the thing you want to hunt for, because when it looks that way, it's going to be something completely different. We look at AU. AU already gave you that pullback down into that inefficiency here. So mark that off. So you have this there. And this is where the shift occurred. So you can see that's a swing high here. And there's also another swing high here. And there's also another swing high here. So price ran through all these swing highs. Notice small range candles, large. Dynamic price action. That's how you catch these moves. You got to wait for the small days, then you'll be able to catch a large day like that. We're probably going to make a higher swing low somewhere along the lines in here, and then probably try to target this high and this high here. Unless we failed to get to this high up here, and there's something going on, price is going to continue to break down lower. Now, I was showing in the channel as well that gold and dollar are currently above Sunday's opening price. Now, it's been a while since I used or talked about this, but I'm going to talk about it here. If I could just draw a line. Now, I know it looks like a mess here. But if I could draw a line, because it's all the IPTA stuff being showed on the 1 hour from Sunday's data. So we get to Sunday with the opening price right here. Yep. That's the opening price. So I'll make this line as big as possible. That's the weekly opening price. So it's above that price point. You can see how it dropped below the weekly opening price, made the low of the week, and continued rallying up. We're now in a premium territory. Now, if we look at DXY, same thing could be said. So we can look for Sunday's opening price. Where are you at? You are right here. There it is. They're both above the weekly opening price. So one of the two is lying. They both can't be in the premium. One of these pairs is lying. Now, maybe the dollar index, possibly. Maybe gold, possibly. But in order to understand what's going to happen, we need to watch this probably going into next week. So as of right now, like I said, I'm going to sit on the sidelines. I still personally am favoring a weak dollar and a strong gold. That's where I stand right now. Not to say I'm going to get it right, but that's where I'm standing based on what the price action is showing me right now. I still want to play the sidelines when it comes to any trades or trying to pyramid on the gold longs. I'm just going to play it cool, probably stick to my Asian session model, get my 15, 20 pips during Asian, and call it a day as the month comes to an end. Hopefully this was insightful. Peace.